What's up, guys? It is Monday, August 22nd. It is 4:44 p.m. and this is a newsletter. So I don't think I brought it up in the last video, but I had a speculation as to how this is going to go down. This is what we've been trying to figure out. So what I think is going to happen is, so recently Russia had gotten banned from the London benchmark rate. It's like an interbank interest rate for overnight lending, and they got banned from the LIBMA, it's what it's called, LBMA, and they're creating this new standard. It's like the Moscow something standard. Moscow. So here it is. So alright, so Russia planning a new gold standard to fight the London Bullion Market Association. So in March of 2022, the London Bullion Market Association suspended the membership of 6 major Russian gold producers to ensure an orderly market. So they're creating this new Moscow world standard. And the Russian Finance Ministry announced a critical new standard to normalize the functioning of the precious metals industry both domestically and globally, and have a strong alternative to the London Bullion Market Association. The Moscow World Standard will become an alternative to the systematically rigged and manipulated precious metals market to lower prices. So at the core of this new structure, there'll be a brand new international precious metals exchange headquartered in Moscow. The Russian committee working on this also proposed fixing precious metals prices based on the largest banks based in countries that are members of the Eurasian Economic Union. So Russia's planning a new market for gold, platinum, silver, and other precious metals that will be regulated by countries that control the resources for these precious metals. This will be a revolutionary shift in supply, demand, and therefore price action in these markets. Based on this new market led by the Moscow World Standard, it intends to expand the bilateral trade in currencies, specifically excluding dollars, euros, and pound. Eurasian countries and BRICS combined already produce 57% of the world's supply of precious metals. With Peru, Venezuela, and other countries joining soon, this number will only grow in favor of the Moscow World Standard. Another important factor to consider is that Russia has already fixed the price of gold in rubles, which works out to approximately 2,440 US dollars. So what does this mean for you? It seems to be clear that Russia, alongside the BRICS nations, are giving everything they've got to exclude the dollar, euro, and the pound from international monetary settlements, and therefore dramatically reducing the importance of Western currencies. Precious metals are a logical way to go for Russia, as they just like us understand that ultimately currencies backed by precious metals cannot be fooled. It seems the days of the LIBMA's ability to drive down gold prices using manipulative tactics in the paper market are coming to an end. One thing is clear: Russia and other BRICS countries are ready to peg currencies to precious metals. Considering they control the majority of precious metal production, it seems that they might be playing their cards right. As soon as it hits mainstream, we'll likely see headlines saying, if you're holding precious metals, you're funding Russia. Remember the 2030 agenda, you'll own nothing and be happy. Well, it turns out with the rapid devaluation of our currencies, we might indeed soon own nothing. And one thing is for sure, BRICS pegging their currencies directly to precious metals shows that BRICS countries are not going to fight individuals owning gold. The West just might. When the days of the LIBMA are numbered, we will see the true value of precious metals, this time on a global level. So this ties in with the Basel III implementation happening January 1st, 2023. This plays into BRICS nations developing their own kind of currency payment system between each other, where they're having their own digital currencies, and then they're going to have a basket of commodities with a neutral bridge asset to facilitate the exchange from local currency to local currency. And it seems like this Moscow World Standard is going to play a role in this, as well as this ties into BlackRock as well too, with the Ice 9 freezing everything. Dude, I think I got this mapped out, so let's cover it right now. So first off, we know after the collapse you'll see a new entity surface that will be in charge of a new digital currency. So let's listen to this again.
Let's move on to your presentation at this conference that you'll be making later in the day. The theme is the demise of the Federal Reserve.
Right.
Pretty strong words. What do you mean by that?
It is. It's something that the media hasn't caught on to yet, but it is the chain reaction of what is going on right now will lead to this. And basically, I'll be talking about how, the debt that the government is taking on, coupled with the Federal Reserve's balance sheet that keeps ballooning, coupled with interest rates that they just want to keep lower, will eventually create a situation, a collapse in the system, where you will no longer see the Fed in its current form. It'll be kind of abolished, if you will. And that's going to happen strictly because the people will demand it. And they're going to go over it. It relates to cryptocurrency because eventually you're going to see a switch over to this kind of blockchain, crypto, digital currencies that will eventually be the future.
Okay, so you've outlined your thesis. Walk us through the mechanics of how this abolishment, this transition will happen, and what new form the Federal Reserve can take.
Yeah, so the chain of events started actually in 1977 with the dual mandate. So as soon as the Fed got put in the position of having to monitor unemployment plus inflation, that was the beginning of the end for the Federal Reserve. The reason it was is because basically, if you want to keep unemployment low at all times, which is what the Fed wants to do, you have to constantly stimulate the economy, right? By printing money and keeping interest rates low. Well, you can't be the parent that spoils the child and then also be the one that's hard-nosed and says, well, we're going to raise interest rates because inflation's getting out of control. You can't do that. And that was the beginning of the chain reaction that I'll talk about in the presentation. After the collapse, you'll see a new body come up that'll be in charge of the digital currency, whatever it may be, and eventually you'll see this digital currency probably being used all over the world, even as the reserve currency.
So there we go. So there's going to be a collapse. And from that collapse, you're going to see this new entity surface, which will be in charge of this global digital currency, and it's going to be a world reserve currency. So let's keep going here, because the Federal Reserve has published its final guidance that would allow crypto banks to participate in its payment system. So everything's kind of connecting to this point here. Like everything seems to be going on simultaneously across the world. So it's a lot to keep up with. So if you're hanging in there, then kudos to you, because it's a lot. But here we go. Payment currency. Remember we heard about this?
It's important to distinguish between a payment currency and a reserve currency. Okay. The dollar dominates both realms, but it's much easier to replace the dollar as a payment currency. If you have enough parties that agree, you can use baseball cards or bottle caps if you want to.
Which is what Russia's doing right now. That's a payment currency in that scenario.
Correct. Yeah. That is already going on. Those talks are fairly advanced. There's, the BRICS, Brazil, Russia, India, China, and South Africa, but it's now morphed into the BRICS Plus. They've invited Iran, Turkey, Argentina, Brazil, and other countries to join that group. There's something called the Shanghai Cooperation Organization, led by China and Russia with some Central Asian states. And there's a third group called the Eurasian Economic Union. It was sort of Russia's answer to the EU, but that involves, Belarus, some Eastern European countries, Russia, and some Central Asian republics. So those three organizations, all multilateral, and you say, they're just emerging economies, who cares? No, we're talking about half the population of the planet, more than half of the global GDP, and major oil exporters and natural resource producers, strategic metals, agriculture. This is a big deal. They are already working on these channels. They're actually doing exactly what John Maynard Keynes wanted to do here at Bretton Woods in 1944. They're talking about, nobody wants the ruble as a payment currency or the Chinese yuan. That's not going to happen. Right. But they could invent a totally new currency, call it whatever you want. I mean, John Maynard Keynes did. He called it the Bancor. Backed by, at first he said a commodity basket, so much oil, so much wheat, so much gold, et cetera. And then he said, but oil's not really fungible. There's 70 kinds of oil based on viscosity and sulfur and all that, and wheat, it spoils and whatever. So let's just go to gold to simplify it. So a lot of times you end up with gold, not because it's shiny and pretty, but because it actually works. Mm-hmm. We're going down that path. In the meantime, China's talking to Saudi Arabia about selling oil, or buying oil for Chinese yuan. Russia's talking to India about they don't want Indian rupees. I mean, how much curry do you want to buy? But they're talking about accepting the UAE dinar, which is coming along. Dubai is a major financial center, transshipment center, and if you have dinar, you can use them for something. And India's got a lot of dinar because there's so many Indians in the UAE who are sending remittances, and then other transactions going on. So this is all happening. So then the question, where does it go from here? I was in meeting once at the Pentagon, and I was 2 seats away from a guy named David Dollar, who was the Assistant Secretary of the Treasury at the time, but he was in charge of federal finance. Interesting last name.
I was going to say that.
Perfect.
David Dollar, he's a real guy, he's out there. And I told him, or exactly what I just told you and told our audience. I mean, I've been saying this for a while. And he slams both hands on the table like that, and he goes, the dollar has been the global reserve currency, the dollar is the global reserve currency today, and the dollar will always be the global reserve currency. I said, David, I feel like I'm in Whitehall in 1913 listening to John Bull tell me about how sterling will rule the world forever. Right. And the answer is these things do come and go.
Right.
But I think we're pretty far down that path. So as a payment currency, I think we're going to see a lot of substitutes very quickly. As a reserve currency, it will take longer because you don't pile up $100 bills in the basement. You need an asset, and that's treasury bills and notes. We haven't found a good substitute asset. Rule of law is a big factor. But we're moving that way.
So we definitely are moving that way. And notice how he said quickly as the payment currency. And it seems like it's going to happen next 3 to 6 months with all these things lining up. We have the ISO 222 Big Bang migration November. Then we have in October, we have the switching from the LIBMA to the Moscow World Standard. And then we have in January 1st, 2023, the Basel III Accords. And then we also have DTCC going live today. And then we have central bank digital currencies being launched left and right between the end of this year and then early next year. So a lot of things are happening. And then we got all these different payment systems being upgraded, and it all falls into line, as well as with the BlackRock kind of linking up with Coinbase, as well as like dollar going up a ton, bond yields going up a ton, stocks down, crypto's down. Like, it's the perfect storm for that ICE 9 scenario as well too. And I'll walk you through how I think it's going to play out at the end. But we went over this as well too. I'm in the Gold Room in the Mount Washington Hotel in Bretton Woods. This is where the Bretton Woods agreements were signed. That's the original table and chairs, unchanged since 1944. We are closer to a new system where gold again plays a role than most realize. And I think we realize it. I think we know it's about to go down. And this all plays a role. What I shared about the Russia thing with the LIBMA, like, we're seeing these narratives being built, and now we're connecting the pieces, and we know where to look now. So this is huge. Just came out like the other day. But let's keep going here. So we have Iran, we're in talks with Russia to join the mirror payment system. So a lot of other countries are seeing the writing on the wall and are like, I'm going over to this side, because they know what's about to happen. And then this is Jim Rickards again. Let's hear it. Oh, this was a long one. I'm just going to kind of skim through it. Oh, it doesn't seem like there's any sound. Something happened there. But let's keep going. So what is Bretton Woods? We learned about this in Agartha, and for a reason. We learned about and how Jim Rickards said John Maynard Keynes and the Bancor and all that stuff. The reason why we learned that in Agartha is because this stuff doesn't happen every day. This stuff happens every 100 years, and we're living through the moment that we're at the 100-year point, in a sense. Like, this stuff is about to go down, and Americans and the US dollar are going to be probably the biggest losers when this gets rolled out. So this is so much more important in the macro sense, because knowing this, you're able to front run it and make sure that you're safeguarding like your security, your wealth, your assets in preparation for this to go down. Because once it goes down, if you're not ready for it, it's too late. So this is why we learned about it all in Agartha, and that's why I learned the fundamentals were first, because you can learn how to trade, you can learn how this, that, and the other thing, but first you need to know what's going on, because all you need to know is what's going on and how you can kind of safeguard yourself or put yourself in a position to benefit from it. And then you can learn how to trade. You can always learn how to trade, but when this goes down, it's gone down. So that's why if you haven't gone through all the way through Agartha yet, definitely do so. But what is Bretton Woods? Talk of the BRICS nations creating a new reserve currency introduced the idea of Bretton Woods 3.0. Before tackling 3.0, it's helpful to understand the original agreement, the thread that breaks down Bretton Woods in easy to understand terms. So from Bretton Woods, we got the International Monetary Fund, we got the World Bank, we got the gold standard, the US dollar being picked as the world reserve currency, and I think we got the petrodollar system around that time as well too. So that's what happened then, and now they're talking about a new Bretton Woods moment, And all those similar things are now happening, but not as far. The U.S. isn't going to be the winner here. It looks like all these other nations are going to be the winners as far as they're going to get the seat at the table making the calls and the shots. So let's see. Here we go. So the United States had the most wealth at the end of the war, owning 2/3 of the world's gold supply, and was in a position of power to dictate the terms of the agreement. Now it seems like the tables have turned where like we don't have gold, we don't have the commodities, all these other countries do, and we had a war with COVID, and we do have the Ukraine-Russia war going on right now, but we're seeing the same thing play out. We're just not at the head of the table anymore. Any nation holding dollars could redeem those for gold at a fixed rate of $35 per ounce. I'm sure that they're going to do the same thing as in Russia. Like, exchange rates between those various nations' currencies and the dollar was fixed. Remember, they're going to fix their currencies. Same shit. It's about to happen. So it was announced as temporary, but the U.S. never returned to a system where dollars could be redeemed for gold because they cut the dollar off the gold standard, and that was the start of the dollar's demise when they did that. A new agreement took its place that the current system using fiat dollars with variable exchange rates between countries. If you found this, okay. So let's keep going. So the new Bretton Woods moment taking shape. We had watched that in the last video, so we're going to keep going. But we have... So Bob Way, he was one of the first Ripple employees, like one of the first 10. And there's all this conspiracy talk about the International Monetary Fund. They have the SDR, Special Drawing Rights, which is like this new kind of currency that's backed by all the major world's reserve currencies. So what if they digitize and make the SDR like a digital currency? Same concepts apply. You have the major nations' world reserve currencies in there. You have commodities and what have you. But then you have XRP kind of be the way to move this new currency around, and you have XRP pre-allocated to these nations based off the GDP. That's kind of how the SDR works right now. So this is what he's talking about. Bob Way acknowledging that escrowed XRP pre-allocated to banks is not a conspiracy, but fair to say.
Let me expand on that a little bit. I also think it's important to remember about escrow that there could be portions along the way here that are allocated for entities like banks who understand we're not going to be like the record company, put us on the till, we're going to get our blockchain together and all our this together and get their stuff in-house together, but it's waiting for them at a certain point as well. So is that a little too optimistic, or is that fair to say? So let me expand on that a little bit, but that's generally fair to say. And that's... I also think it's important to remember about escrow that there could be portions along the way...
Well, it was kind of hard to hear it, but it seemed like it was straight. So Bank of China, Ripple needs, we went through this, yep. So Rosie Rios, 43rd Treasurer of the United States, let's hear. I think we might have heard it. I think we did hear this. All right, let's keep going. So 25 corridors running on-demand liquidity, XRP, let's hear him.
Been at this for 10 years now. It's hard to believe. We celebrate our 10th year anniversary in October. Wow. And so one of the OGs in the crypto space. But we, soon after the company was founded, and of course the XRP ledger was started, we went on a journey to build a use case for Ripple, and spent a lot of years building Ripple Nets, which was and still is a fiat-based network across some 55 countries, 6 continents. But importantly, the vision was always, what could we do with that network once built, and put digital assets, cryptocurrency on the network? And that has happened extremely quickly over the last year, as our on-demand liquidity product has really lit up those rails. And now there are 25 different countries where ODL is available. A huge percentage of our volume now is in ODL. And so while we still have fiats in certain parts of the network, and it's important, especially with some crypto cold markets, we're very quickly adopting on that front.
It has happened extremely quickly over the last year.
So let's keep going here. So Cambrian explosion is near, Ripple building the internet of value.
I heard you talk about the potential then for, as you're saying, an explosion of economic development, which is why the developing world, central banks and regulators are so much behind all this, because we'll have markets of billions of people who are not connected to markets today.
Yeah, it will create huge economic growth, just like that shipping container did, just like the internet connecting 3 billion people and growing, what about 20% increase in global GDP in about 5 years? So the implications here are huge. And governments have really been getting behind this. That's what's really encouraging. You know, in 2014, it was kind of dark days for regulation in blockchain in space. Now, I think the regulators are getting behind systems that make sense, like interoperability, and getting behind digital assets. Because, again, the cryptocurrencies, the digital assets, whatever you want to call them, they also play a key role in that. Once you get the plumbing in place, those new types of assets that have no counterparties create incredible efficiencies to reduce capital that has to otherwise be kept by banks all over the world. Could be used for IoT, because again, probably once you get that infrastructure in place, most payments will be machine to machine. So that also kind of, you know, again, once you solve the developing world problem, that also solves the IoT problem. So the explosion in the number of transactions is tremendous, and that drives a lot of what the demand for digital assets, which regulators are and banks are getting behind now.
There we go. Then we got gold and a digital currency to solve the transportability problem. Let's hear it.
National currencies with on a gold standard, just like Russia's done, right? Mm-hmm. But that they wouldn't. It was too cumbersome in the world we live in today to be putting tons of gold on military aircraft and shipping them back and forth between countries to settle up transactions at the central bank level. So why not price a digital asset? Why not use the best one, the most useful, and basically just tie that 1-to-1 to an ounce of gold? And that's where we kind of came up with this, concept that you could see some people sitting around the table going, we're going to go back to a gold standard. We're going to write up these assets. We're going to write up gold into what the implied price already was. And then using XRP to communicate that value digitally instead of having to actually do it physically.
With central banks.
Just makes sense, right? So with this happening, right, it just seems like it's the one. It's the one. So Chamber of Commerce, Chamber of Digital Commerce, today the Federal Reserve announced forthcoming guidance for novel financial institutions to access master accounts. It seems to grant a pathway for crypto banks, like those deemed special purpose depository institutions in Wyoming, to participate in the Fed's payment system. So I wouldn't be surprised to see Ripple turn into a bank, and now they're straight access to a Federal Reserve master account. Just makes sense. So now Turkish banks are now adopting Russian payment systems. Turkey is considering joining BRICS. BRICS is working on a new global reserve currency and alternative mechanism for international payments. All these countries are stockpiling gold. Everything's leading up to this moment. So gold and XRP, not Bitcoin. Let's hear it.
Now, it certainly does look like Bitcoin is going to survive this. But at the end of the day, when we get that inflation and they reset the current currency into the new currency, do you think they're going to reset it against Bitcoin or Tesla stock or even real estate? No. They reset it against gold money because it has the greatest functionality of any asset. It is used globally in every single area of the economy. And it's finite and it's indestructible. So we can account for pretty much all of the gold that has ever been mined. And there's more than 4,800 cases of currency resets, and 100% of the time they do it against gold.
With central banks.
There we go. And then there was also one thing, like, look it up. So gold IOU and silver IOU on XRP ledger. So Ripple XRP platform to begin trading gold and silver. Ripple has recently entered a partnership to launch a platform for the trade of metals such as gold, silver, platinum, rhodium, palladium. The digital currency platform will partner with BPG Group for this endeavor. So the statement reads, as a precious metal refinery, we see big potential in Ripple Consensus Ledger and the conversion of rights to metals into digital tokens, IOUs, on Ripple Network. We decided to offer investors an alternative way to invest in and trade physical metals by providing the performance of the an electronic clearing system operated by the LPMCL with the transparency of an exchange-traded asset. So they already have it set in stone. Like, if we go to BPG Group right here, so BPG, Ripple partners with BPG Group for tokenization of precious metals. And now we're going to search this. And this was back in 2018. So BPG launched, this is literally back in 2016. So BPG launches XAU trading on Ripple. This is GateHub. Today we're happy to announce a new gateway on GateHub. You can read more about it. There we go. So BPG launches XAU trading on Ripple. 2016, October 4th. That's Bancorp Physical Gold is a licensed bullion dealer, a boutique precious metal refinery, registered investment manager, and globally active precious metals group. And you can see that 1 XAU equals 1 gram of pure gold. So why trade XAU on Ripple? So what represents, okay. And moreover, an XAU can be redeemed in physical gold that is stored in the vault is shipped to you. This is the future right here, right here. So Ripple Hot Wallet, Cold Wallet, how to check the reserves. Now let's look and see. It was created, it was modified today. Something's up. Something is up. I think we found something, but created June 29, 2016. And it was last modified today. I don't know what it all means, but you can see that this is active and live. This is active and live. So we know here that this is already going on. And the only one that can do this is, you know, Ripple and Stellar. This is very interesting. So it's saying it is 176 XRP for 1 XAU. Huh. I think we're going to be able to find out what the price of XRP actually is right now. It's going down. So 176. We know that we assign 1 gram of pure gold. So how many grams are an ounce? That's 28 grams. So we know that 28 times, or 176 divided by 28 is 6.28. And that's how much. So 176 divided by 28 is 6.28. And if we divide that by the an ounce of gold, say it's 1800, so 1800 divided by 6.28, you're talking about a price of $286 per XRP if this, you know, is doing it right. So behind the scenes on the private ledger, it's possible that XRP is already priced in the hundreds. Speculation, or did we just crack the code? We'll see. We'll see soon, that's for sure. But all right, we got right here, DBS Bank doesn't think the US dollar will remain the world reserve currency. We asked if a single crypto backed by a basket of world currencies would work. He suggests it would have to be tied to a basket of commodities rather than currencies.
Right?
Okay.
What do you see in 10 years?
Okay, that's also a very tough question. I don't have the answer to that, but I'll tell you how I will approach it. One, money as we know it today, and the US as a reserve currency, I think will be stressed. You know, governments that are not aligned with US policy would start wondering, should I keep US dollars, should I keep US treasuries? And if I don't agree with US then weaponize it against me. So I think that question is in most government mind. Okay, if I'm running any government, that will come to mind. A currency being backed by commodities, you know, a basket of commodities I think would be best. But I don't know if we'll go that way. And I mean, China has been pushing for that. Now, we have cryptocurrency today, we have stable coin today, we have central bank digital currency today. So there's a lot of question, you know, is there going to be a change? Will the future of money look different? Now, I don't know the answer, but I do know that status quo as we know it, I think won't stay, you know, given all that has happened.
It won't stay
It won't stay. Yeah, I don't believe it'll stay the same. How does it move forward? I don't know. Now, the third...
Well, I was wondering, and maybe I'm just being too simplistic, but it could almost be like the ECU, which preceded the euro, right? It was a trade-weighted basket of currencies. Couldn't you evolve to a cryptocurrency that we could agree on with 10 of the leading currencies of the world, and that's our instrument?
I haven't thought about that. I don't know. To be honest with you, I don't know. If it's tied against a basket of currencies, I'm not so sure. If it's tied against a basket of commodities, maybe. Because I don't think anyone wants to be beholden to any other countries or block of countries.
Interesting.
So he had suggested that ECU could be similar to that. And if you look at a couple of videos back, we did like the search for a world reserve currency or a world currency, and we had covered the ECU and what that was. So it's interesting that he had brought that up because we had just found out what that was. So no utility, no value. Let's hear it.
Financial services is in networks, just as the future. But the future of money, the future of value, the future of financial services is in networks, just as the future of everything else that we've learned over the last 30 years is in the values in the network. And I tell people all the time when they come to me and said, I just heard about this great new crypto, whatever coin, what do you think? And I say, well, I really don't know anything about it, but I'll tell you what, if there's not value in the underlying protocol, if you don't think that protocol is going to stand the test of time and have the potential to be one of the 30 or 40 protocols that will eventually power an internet of value around the world, then it's just for speculation purposes. And maybe next month it'll be up and maybe it's worth, but I wouldn't place a long-term bet on it.
So this guy's Christian Giancarlo. He was the ex-CFTC chairman, and he actually is now has his own law firm practice and represented or put out a report saying XRP isn't a security. So XRP isn't a security. Giancarlo, and he's actually the head of the Digital Dollar Project. So Digital Dollar Project, Giancarlo, not Christian. So you can see, two former leaders of the U.S. Commodity Futures, CFTC, J. Christopher Giancarlo, argue for the potential benefits of a digital dollar ahead of a Senate committee hearing on the topic. This was in 2021. And they have the Digital Dollar Foundation or project that they're working on. We termed, perhaps not creatively, a digital dollar. And so they were kind of really just promoting a digital dollar, ex-CFTC. And then he had XRP isn't a security, declares former CFTC chairman, and did a whole write-up on it. And then he's saying that the value of a token is within its protocol. The reason why, there might be 20, 30 protocols or cryptos that power the new internet of value where anything of value is flowing through it, right? And it seems like that to be the case. We already know which ones are doing that. XRP is powering the internet of value as far as cross-border payments, and then you have ones that are for supply chain and stuff like that. The values in the protocol really doesn't matter about short-term price movements with all these other coins, because if they're not going to solve a problem, then they're not going to be here in a couple of years. Whereas the coins that are suppressed right now seem to be the ones that are solving problems, but in a couple of years, you're not even going to believe what prices they're at, especially when all this stuff goes down. So let's keep going because we have a tidal wave is coming. XRP, let's hear it.
The second one would be more clear regulation. That would help a lot. I do talk to, pension funds and, various asset managers, sovereign wealth funds and stuff. And a lot of them tell me, we've got 1% of our portfolio in crypto today, but we really would rather have 20% in there. But what we're waiting for is more clear regulation, coming out and saying that clear test that I was saying. These assets are commodities regulated by CFTC, these are by SEC, these are by Treasury, whatever. So that would be a big unlock.
A sovereign wealth fund is a whole country. Brian Armstrong just said whole countries are willing to go from 1% of their portfolio up to 20% as soon as the U.S. gives clear guidelines on what's a commodity, what's a security, and what's a currency. A pension fund is an investment that pools everyone's retirements together like unions or government employees, going into crypto, going from 1% to 20%. Please take a moment to think about what that means. After the big guys get in, where will utility take us?
Huge, such a huge amount of money. We're even talking about BlackRock, say $10 trillion assets under management. 10% of that, you're talking $1 trillion just flowing into this market, right? And there's right here, even just seeing this comment, there's an estimated $35 trillion in global pension funds. If that was 20%, 20% flowing into the crypto markets, that's $7 trillion, right? But there's so much more money is just going to flow into this. But we got Carbon Bank CEO suggests each citizen should have limited carbon emission rights, accredited credits annually that they can buy and sell via Carbon Wallet. And remember that, I think it was called Zago, XRP, carbon credit. So Zanj.com will develop a carbon credit solution on the XRP ledger. Look at this symbol, right? This logo. Then you got United Nations Sustainable. Wow. Look at that. Sustainable Development Goals. This is the United Nations like 2030 agenda like logo. And then you got the Zanj.com, which is their logo too, will develop a carbon credit solution on the XRP ledger. Zanj is working hand in hand with the UN development system, focusing on African market infrastructure solutions for carbon markets and to contribute to the Sustainable Development Goals, doing carbon credit offsets and developing it on carbon neutral XRP ledger. XRP is tied up with the United Nations. They're destined, and if you watch my last newsletter, United Nations agenda is being set in stone and being implemented in. And so we're following the money. Regardless of how we feel about this all, and we don't want this to happen, as long as we can kind of profit from it and then we can kind of, maneuver in a way to not participate in this, that's how I feel about it. I'm trying to get set up with taking advantage of profiting from this to then have the financial capacity to not be locked into the system and able to kind of maneuver around it, right? That's why I tell everybody about this, to get on board, see what's going on, take advantage of this opportunity, because once it's done, it's done. And who knows what the future looks like if we're not in on this. So let's keep going. Yeah, so that's it, guys. That's it for this video. It's a lot. I'll probably do an additional add-on to this because there's way more. I have like 100 tabs up. It's so crazy. I'm going to catch up this week on tons of newsletters so we can start off next week fresh. We're just giving the most up-to-date stuff. So that's it for the newsletter, guys. I'll see you in the next video.